Japan need to prepare for eventual end to BOJ's yield cap, says MOF government. Tokyo, Japan should prepare for the time the critical bank abandons its 0% cap on long-term interest prices and while personal investors emerge as the dominant participant within the authority's bond market, mentioned a finance ministry executive overseeing debt issuance. While the Bank of Japan's BOJ massive bond buying may be reducing market liquidity, it has now not caused any disruption to the government's fund elevating, mentioned Michio Saito, who heads the ministry's department charged with issuing Japanese authorities bonds, JGBs. It's a snug state of affairs for us in that we're able to stably difficulty JGBs at low interest charges, thank you in element to the impact of the BOJ's financial policy, Saito advised in an interview on Thursday. But we ought to bear in mind the BOJ's present-day coverage may not final for all time. Sometime within the destiny, it won't buy as a whole lot bonds because it does now, and could no longer peg hobby charges at a fixed level, he said. The Ministry of Finance (MOF) should prepare for the time the important financial institution modifies ultra-low charges, consisting of by taking steps to decorate liquidity inside the JGB marketplace, mentioned Saito, who became Director General of the Ministry's Economic Bureau in June. Saito, referred to as Mr. JGB, for his information within the marketplace, stated his division will paintings on developing marketplace infrastructure for whilst private buyers update the BOJ as a prime participant in the JGB marketplace. The comments highlight how Japanese policymakers are quietly laying the groundwork for while the BOJ withdraws its large stimulus, as its counterparts across the globe tighten monetary policy to deal with hovering inflation. We're running intently with the BOJ to make sure the JGB market's feature does now not become worse too much, Saito stated. Under its yield curve manage (YCC) coverage, the BOJ caps the 10-year yield round 0% and gives to buy limitless quantity of JGBs to guard an implicit 0.25% cap across the target. BOJ Governor Haruhiko Kuroda has again and again brushed aside the chance of a near-term exit from ultra-low fees, stressing the need to cognizance on assisting a fragile monetary recuperation. But Deputy Governor Masayoshi Amamiya, taken into consideration a sturdy candidate to prevail Kuroda when his term ends subsequent April, has stated the BOJ ought to usually reflect on consideration on the appropriate means for exiting ultra-easy policy. After years of big buying to fire up inflation to its 2% target, the BOJ now owns one-half of terrific JGBs within the marketplace. Mounting upward stress on yields compelled the BOJ to buy a record month-to-month amount of JGBs in June to shield its yield cap, rolling again years of efforts to taper its massive shopping for and drawing criticism from investors for distorting market pricing.